Market update here on the 4th. So it went up and down 4 times a day, a little bit different than what was expected by me, but we're just trading in this range, and so very choppy corrective moves. I think we started out up about 1%, sold off 1.5%, then moved up 2%, and sold off again, I think 1.5%. And then went up 1% at the end of the day. So just chop every which way. And it's going to be like that until we break out of this range. So we'll see what happens over the next couple of days. Things to look at from the top. I noted that the 20 crossed the 50 yesterday. Also, notice how we hit the 20 on both sell-offs before it happened. We have not done that yet. So that is something to keep in mind. We might have to come up here to 388, 390 before we can sell off substantially. So now getting that out of the way, we can go on lower time frames and just look at what's going on since the 22nd. First thing is, I've been talking about this potentially being an extended fifth wave. That's still possible. It hasn't broken above 387.50 yet, so this still could be A, B, C, and then we sell off down to new lows. That's the first scenario. Probably not as likely, but keep an eye on it. If this were the case, I'm still looking for the low 360s before it bottoms. So that's the first scenario. Second scenario is we are only completed the A wave. So we have A, pullback B, and then we get a C wave up here, and it takes like most of January into January OPEX. That is possible too. So we could see more chop over the next couple of days and then finally break out of this here in like a week or so. So that's the second scenario, and that would take us probably to 390 because if you look at the 1.61 fib, actually, let's see where that would be. It might be higher than that actually. That would take us to 392.54 for the 1.61 fib, or 1.23 fib here at 388 would be right around the 20-day moving average. So that's the second scenario. Third scenario is that we just started a first wave of the C wave. So we have A, B, and we're starting the C wave. Within that C wave, this is first wave, second wave pullback, we get third, fourth, and fifth up here. And this would probably go all the way to like 394. So I give that less of a possibility of happening because I think it would go higher than the 1.61 fib of the A wave. The last scenario is in line with this being a first wave, this being a second wave, and we get a third wave down, except for I'm looking at it a little bit differently. It means that this is actually we get the 5-wave move from here down. So it would have started here at like 386, and then we get a C wave up here. So this would still be a sell-off, but it wouldn't go down as far. It'd probably take us like kind of close to the bottom here, or potentially just go down to 366, the 1.23 fib, and then go higher. So I think that if it just sells off from here, that I would actually consider this more of a B wave than a second wave. So we've only retraced about between the 0.23 and the 0.38 fib. And so it'd be more like a B wave, and then this whole thing would end up being, I think I talked about this yesterday in the video, would end up being W, X, Y to like 450. So that's the next scenario. If we just sell off from here, I would say that's actually a pretty good possibility of happening because of how shallow this wave is. I can't consider that a second wave if it only goes to the 0.23 fib. So it'd be more like ABC lower. So we need to get 388, 390 minimum in order to get a second wave. It'd still be a shallow second wave. And we'll just see what happens when we break out of this range. I don't have a lot more to say about it, only because I'm the same way. I'm just waiting for this to break one way so I can kind of tell what's going on. If we break down tomorrow, then I'm going to consider this most likely it's either going to be a B wave lower, or this is an extended fifth wave. Those are the two possibilities we break down tomorrow. If we go higher to 388, 390, then I'm going to consider it a second wave, most likely. Even then, it could still be a B wave too. So that's why it's kind of hard to make like extremely accurate predictions all the time on these corrective waves. There's so many different ways it can play out. And so as soon as we get out of this range, I feel like I'm going to be able to make a better prediction of where it's going to go. So tomorrow, just watch and just see if this breaks to the upside from here, then I'm going to consider it most likely the start of a third wave. If we break down here to 380, then I'm going to consider this a 5-wave move. It would look like this: 1, 2, 3, 4, and 5. So it'd be kind of like a nested 5-wave move. We have 1, 2, 1, 2, 3, 4, 5, 3, A, B, C, 4, 5. So we will see what happens tomorrow. After hours, not giving any signs. Let's go over Tesla. And I didn't trade very much. I didn't trade hardly at all today, to be honest. I don't like trading in these small ranges, trying to like day trade like that. Lately, I haven't been doing that, and it's working out a lot better because I'm buying 3 or 4 month out options, sometimes in the money too, most of the time in the money. And I'm making still good gains with that strategy. I just dollar cost average into them on certain moves. Like for instance, I'm holding a few puts right now. But if we make it up to 390, I'll just average down on those. They're for April. And then by the time it comes back down, I'll probably be up a pretty big amount. So that's kind of my strategy lately. I don't want to trade those 0 date to expiration options, get chopped up. You might win big. You might get a 200% gain and then lose a whole. If you're not good with your risk management, you could lose a lot real quickly. So Tesla is giving me the sign that SPY is most likely going to go higher. I say that because this looked like a fourth wave, but it went past the 50% retracement here at 114.14. Backed off a little bit. I'm expecting an ABC move up to 120, probably in line with SPY going to 388, 390. We'll see how that goes, but I think that's the most likely scenario for Tesla. So it's starting the overall fourth wave here. So I have it all the way up here, but I don't think it's going to get that far. I think it's going to be more shallow, probably only going to go to the midpoint. And then we make the final move down. Targets for that. If we only make it to 120, this could go a lot lower. So we'll see. 80 was my original target. We'll see if it goes lower than that. But I'm expecting a bounce to 120. Next one, Apple. So Apple, little bounce today, nothing major. I'm still looking for it to bounce as well. So that bodes well for SPY. I think it could bounce potentially all the way up, maybe only right here to 132 to 136 for a X wave and then get the final move down, or all the way up here to 141 to 146. So looking for a bounce out of Apple. QQQ. QQQ at 265, doing the same chop as SPY. I'm still looking for this to most likely bounce as well. go on lower time frames. And yeah, it's kind of the same thing with SPY. So we have this move down right here, and then we get an ABC move still below it. Same scenario as SPY. This is potentially A right here. Pullback B, C wave higher like that. Or, again, we're looking at, this is less likely, I think. We're looking at this as being 1, 2, and we get a third, fourth, and fifth wave down here. So we'll see on that. Let's go over the dollar. Didn't really move today. I'm not going to go over it. VIX doesn't move anymore ever since they introduced 0-date expiration options. I was talking about that with somebody today. They were saying that the volatility of 0-date expiration isn't even factored into the VIX, and that's why you don't never see the VIX move anymore. The volatility of just like the put walls, call walls is causing all the volatility, but the VIX isn't even moving. So maybe when the VIX does eventually move, we'll get an exponential move lower or higher based on, I don't know. Maybe we'll see what happens, but that's what we were talking about today. And it's interesting how the VIX, I can show you right here on the daily chart. So on this move from here, the 12th to the 21st, the VIX was right here. It went all the way down to 19 for 25. What did SPY do? 410 to 374, and the VIX went down. So that's what I was trying to say is VIX is not really helpful anymore, because every other move we've had, it's done the inverse. So this move right here, from October all the way to December, we went from 34 all the way down to 19. So that move looks pretty good, and then that's when we started getting the 0-date expiration options, and then you can see it's not the same as it used to be. So Bitcoin, and then I think that's pretty much it. Bitcoin just sitting there, same thing as before, waiting for a move down here to 10 to 12,000 here, probably in the next couple months. Still doing a second wave right here. So that's pretty much it. Just waiting for this range to break out. We have supply and demand choppy the whole day. Once we get out of this range, I'll be able to say with more confidence where we're going, but right now I'm just giving possibilities because I don't really know which way it's going to go short term, and we'll just react to how it goes. It's pretty easy. If it comes to 390, you buy puts. If it goes lower, you're probably going to hold those puts and then write them down to the bottom here. This could potentially go all the way to, if we get a next move down, all the way down to 353, 1.61 fib, double bottom with October lows. So we'll see what happens. Leave me a comment. Let me know how you did today. Did you trade any? Like, subscribe for more updates, and I will catch you tomorrow.